Happy Saturday, everybody. I hope you guys are having a great weekend. Commercial real estate is crashing. It is unraveling pretty much everywhere. In fact, a lot of the headlines aren't even headlines anymore. The foreclosures, the distress, sending it to special servicer, these were major national headlines a year ago, and today they're almost daily. It's just not news. Contrast that with what's going on in the single family market, and we have had a remarkably strong year so far. However, there are some things changing underneath the surface. The question is how dramatic are these changes and what will it bring for the second half of 2024? In this video, we are going to deep dive into that question, Nashville housing. I'm going to hit a lot of the counties, things like active listings, supply, where you can see the ratio of active to contract volume, discount percentages, things that might give you insight into trends that will help you understand where the market is headed for the second half of the year. So, without further ado, let's get into the data. Okay, first things first. Yellen is pretty much calling for a tax hike here. Higher path for rates boosts needs to lift revenue. Guys, basically what she's saying is we didn't realize we were going to spend this much on interest expense, so now we're going to have to raise taxes. So get ready. I mean, it's not a shocker here. This was coming from a mile away. And if you think this is just a Democrat proposal, the truth is that we messed up a long time ago, and now we're going to have to fix it. And you're going to see this on the state level, you're going to see it on the national level, and you're going to see it on the local level. Everybody's going to start complaining about tight budgets and needing more revenue and potentially having to make cuts. That's just the new reality, probably for the rest of the decade. So she's starting the conversation. Of course, this is election year, so it's probably more pandering than any kind of policy change. But when it comes to 2025, it's going to get bad. And I think that's probably why you see a lot of billionaires like Jeff Bezos moving to Miami and selling a bunch of stock. You see Jamie Dimon, he's selling a bunch of stock for the first time in his entire career. Really, I think it has a lot to do with taxes. I mean, I think even Warren Buffett came out and he said that they were cashing up because they're worried about an increase in taxes. So, if you're not expecting an increase in taxes, let this be your warning sign. It's not Yellen, even though this is just pandering. This is one of those pandering statements for elections. She's not wrong. We're going to have to raise taxes among several other things. That's what makes Tennessee so attractive, by the way, guys. That's why Tennessee is so attractive. Okay, Trep, look at this. And this is going to segue into our single family, guys. Drivers of CMBS delinquency spike in April, fixed versus floating rate. The floating rate debt is driving a lot of the delinquency rates happening in commercial real estate. Okay. And the reason that's important is because single family residential does not have floating rate debt. It's almost all either like a good portion of it, 30 to 40% of it is cash. It's owned outright. And the other 60% is owned by, has a ton of equity in a lot of it. Okay. The only neighborhoods that really have high loan to value are those FHA cheap neighborhoods. I'm going to show you a chart in a minute to show you that I think there's some warning signs there. You got to be very careful if you're buying on the lower end of the market. There's some strategies too, right? Assumption is a strategy. Okay, so let's turn our focus to single family rentals. Okay, I've spent a lot of time in the single family rental space because we're listing, one of our clients decided to keep their house and list it for rent, and rents are going up. Now, what you're looking at here is demand. This kind of shocked me. Apparently, demand has been dropping for single families. This is in Nashville. Demand, according to Zillow, has been dropping from the stratosphere in 2021 and 2022. So single family rentals, demand is dropping. You would think that means that rent is dropping, but it doesn't. Look at this, guys. This is starting back at 2016. So let me zoom in here. Okay, 2021, here we go. You can see it just shot up. That was the bubble, right? And then all the way through 2022, you get into September 22. I mean, just astronomical. But even then, seasonally, every August, September, it peaks again and rent goes up another. It's already up again. We're in April. It'll probably peak in August. And you're going to see rent up another, 3, 4, 5%. We're at $22.60 for August of 23. We're already at $22.89 Where will it be by August? Who knows? I'll tell you right now, May feels like a scorcher. You take Nashville as a whole, single families are on their way up. And I suspect this may be why Rutherford County has been so strong, but we'll get to that in a minute. There's a lot of single family rentals in Rutherford County. And if they're getting strong rent growth, that's going to help keep that market from crashing. Now let's take a look. This is for active listing changes in the Middle Tennessee area. And you can see that Davidson County up 41% year over year. Now this view here includes condos. And I got to tell you guys, the reason that's important is because there's a lot of condos in Davidson County. Now, this isn't a condo analysis. This is a single family analysis, but a big chunk of the growth is coming from condos. That's not to say single families aren't skyrocketing. But when you look at over 1 million, things are much more moderate. Now, keep in mind, even these double-digit increases for over 1 million, okay, they are met with double-digit increase in demand. So the over 1 million market is actually very strong, really outside of Rutherford County, which I feel like Rutherford, it's got to be soft there. If it's gone up 70% year over year, there's not an increase in demand that much in Rutherford. So Rutherford, probably soft. Davidson, Wilson, Williamson, look at Sumner down 10%. A lot of lake houses in Sumner. Murray County down 11%. So you can see when it comes to over 1 million, it's much, much stronger. There's just nothing in Dixon, and Robertson only has 15 houses. It's just that's kind of just low volume there. But let's keep going. Let's keep going. And this is the under 1 million, up 50%, guys. Up 50% for listings under 1 million in Davidson. Okay, now I'm setting the stage. I'm letting you guys see what Middle Tennessee looks like because we're going to deep dive into each one of these counties. You can see Williamson down. It's not down. It's basically flat. 3.2%. It's up 3.2%. But with the demand being basically flat, I mean, this isn't really much of a change for Williamson. Davidson's where the softness is. Davidson's the one to keep an eye on. Okay, now let's look. Active listings. Look at this, guys. 6,482. 6,482, we're up almost 1,000 from where we were last year. That's incredible. That's almost 20%. It's like 15, 20%. And we just broke through our November 11th high. This is so exciting, guys. This is so exciting, guys. I'm actually really excited about this. We just broke through our high. Now, one disappointing thing that I have to call out, and it's because I want prices to drop, guys. I'm really rooting for prices to drop. It's been so strong, and I get so depressed. But look at this. It only went up by about 120. Okay, we went up 230 last week. Only went up by 120. Now, that may be because this is Memorial Day weekend. Okay, and I'll tell you, contracts drop over Memorial Day weekend. You can't see it. It's kind of blended over, but 2644 to 2788. This is contract volume. You can see it's peaked. It's peaked for the year. Okay, this is where we peaked for the year, May 15th of last year. We actually, it looks like we peaked a week earlier this year on May 8th at 2,800 contracts, and now we're falling, guys. We're falling lower than where we were last year. Listen, this is important. We've been kind of holding on to volume up until May, and now contract volume appears to be lower than last year. It appears to be lower than last year. People, this is answering the question, can we handle 7% mortgage rates? The answer is actually no, we cannot. The answer is no, okay? 7% mortgage rates are crushing demand because now we're starting to be down. This is almost, 150? This is like 6, 7, 8% down for the year. Okay, year over year, we're down 7%. But even look at that trajectory. It looks to me like we may come back in line or we may continue to go lower. It does not look like we'll pop up above. So that would be a surprise if we popped up above. But listen, guys, that's a bearish sign for the housing market. Okay, so that's set the stage. Now let's dive into each county. Rutherford County, 916, broke through what it was a July 24 high last year, still under the 935 high of November 19th. And coming out of 2022, we had massive amounts of inventory. Rutherford County is really interesting to me. Because remember, I said, and I'm going to show you, the discounts are fairly low for Rutherford County. But I mean, this is 110 listings compared to last year right now. and it's moving up. Got to watch Rutherford for that. Now, low discounts. We're going to get to discounts in a minute. There's still low discounts. Look at Williamson. Williamson's down from where it was last week. Such strong demand in Williamson, guys. People want to live in Williamson. You got to think about the next 8 weeks. You've got June and July, really June to lock in for those schools. And guys, people move to Williamson County for the schools. It's just the way it is. They move to Williamson County for the schools. You know, we have an increase in year over year, but when comparing to last week, it's very disappointing that we're flat. I'm just going to be honest. I'm disappointed. Williamson, disappointed. 2182. Davidson's still growing, not as much as it was growing before, but guys, we're in uncharted territory, guys. We broke through that 2023 high, which was much higher than 2022. Guys, if there is any market that I would be waving caution flags, it's in Davidson. Now, that being said, you can get some great deals in Davidson. There's stuff that's sitting. I mean, I've talked to agents. They're like, I don't know how to sell my house. I don't know how to sell my listings. They're just not moving. The dynamic there is so slow. You can go in and ask. You can make strong offers right now and people will listen. You know, we made a strong offer. We just closed on it. It was awesome. You know, and I'll be, you know, it's not everyone, okay, but we offered 10% off of list price firm and they accepted. 10% off of list price, and this was not a cheap house. So just keep in mind, there's opportunity in Davidson with the amount of inventory that's there. Murray, look at Murray. Holy cow, look at this. Up 85, up over 20% from where we were last year. And guys, look at that. Up higher than 2022 peak in November. This is going to be a problem. We're going to get to discounts in a minute, but guys, this is going to be a problem. Active listings are just going vertical in Murray County. Something to watch for. Look at Sumner. Sumner's got strong active listing growth, but believe it or not, contract volume has been strong for Sumner. So even though we're up almost 20% in active listings, we're actually up in contract volume. It's a hot area. I think it has to do with the new builds over there. Wilson County, also same story, up about 15%. But again, contract volume, we're going to get there in a second, but contract volume has been strong. So it does not feel like there's more inventory in Wilson County right now. Pretty surprising. Okay, now this is a chart that we hit a month or two ago. And I wanted to show it to you again because we are still trending up linearly for existing homes under 700,000. Now, what makes this so important is that we are trending up while demand continues to falter for existing homes under 700,000. Guys, these are resale homes under 700,000. Look at the demand. It's just tanking, guys. 398 versus last year, we were at 470. We're down 15% after it had already dropped from 572 down to 478, down to 398. Are you seeing? This is a free fall in demand, guys. And you can see it ended in April. It is tanking. Why? I mean, I talked to buyers in this price range. Okay, they are struggling big time right now. People that are looking, and they have money. I can name several buyers right now that have between $100,000 and $200,000 to put down, and they are struggling to find a house that they can afford because the monthly payment just doesn't make sense to their income. Even if they could get a loan, it just doesn't make sense. They don't want to be house poor. You have $100,000 to $200,000, and this dynamic's happening. This is where loan assumption comes in, guys. You can pick up a 3% mortgage. Okay, and when we take active listings and we compare it to the demand in a given area or in a given price band, you can see things that you wouldn't be able to see just with supply. And here's my point. You can see, I mean, the ratio is just astronomical in January. So it's a good time to buy a $2 million house in January. Why? Because there's zero demand for the active listings. That's essentially what it's saying. Okay. But you come into May, we actually have more demand relative to the $2 million listings than we did previously. Guys, that $2 million market, I'm telling you, if you can wait till the fall, which most of you can't, I get it. But if you can wait till the fall, look at how it just spikes up. I mean, we're talking about 10, 12 month equivalent supply. It's almost like the market just freezes up. So what I would highly recommend you do, if you are in the $2 million mark and you can do it. Not everybody can do it, but you can do it. Buy in the fall. I mean, look at this. There's no competition in the fall. No competition in the fall. You get into November and you're looking October. Nobody wants to buy a $2 million house in October. That's the time to buy it. Nobody wants to buy a $2 million house in January. That's the time to buy it, guys. That's when they all get listed and nobody's there to buy them. I'm telling you. But you can buy it now. You can buy it now. There's just less inventory for $2 million houses than there was last year. It's crazy, but relative to demand, there's less inventory. But look at this. When we look at under 700,000, we're seeing when you compare, remember, demand is tanking, active listings are increasing, and what do we have? We have a ratio of 1.88, which is relatively tight, 1.88. But look, guys, it's up almost 50%, over 50% where it was a year ago. So even though active listings are up 35%, contract volume is down 20 or 30%. That creates a 50% increase in relative supply. Okay, relative supply. What it feels like now, the velocity of houses getting taken off the market compared to what is being put on the market, it is slowing down. That's what this line means. You've got more options relative to the ones going under contract than you did even, a few weeks ago. It's increasing rapidly, guys. Okay, now let's look at the count of reduced listing. Now, the reason we're looking at discounts here is because discounts can be a leading indicator for problems in the market and for home values to drop. Okay, and we're seeing a massive increase in active listings that have reduced their price. Okay, 2,030 have reduced their price. Now, the problem with this is that it's relatively the same percentage. In other words, it's about 30% when you look at total active listings. So it's not a huge number when you look at percentages. This is actually where I think it's more relevant to look at the number of listings that are reducing. The percentage doesn't do it justice. Okay, you can see that this number is shooting up rapidly. So you look at the percentage, you wouldn't know that there's more and more and more and more active listings that are dropping their price, because there's more and more active listings coming on the market. This suggests to me that we could have a pretty soft second half of the year. Okay, and let's look at Davidson. Davidson, again, we're already at 36% discounted. Okay, last week it was 35. The week for that it was 34. Okay, so we're increasing about 1 to 1.5% each week. Next week actually will be a new month. And so probably not next week, but the following week we'll be in that 37, 38. By the end of June, we could touch 40. Okay. So a lot of active listings drop off at the beginning of the month. So you're not going to see it next week. It would shock me if you see it next week, but the trend is there. Now, when we look at supply, again, this is relative to contract volume. You can see that we started May at 2.4 active listings to what was going under contract. Okay. We're now at 2.8, right? This is a 20% increase, guys. And remember how I said that this number would shoot up when demand began to falter? Well, look, guys, demand peaked in Davidson County right around May 9th, May 10th. And look what happened. It shot up. Yeah, you look at Davidson County contract volume, it is down about 5% from where it was a year ago. So this drop right here is why that supply is starting to feel much, much higher. Okay, let's look at Murray. Murray is shooting up. We went from 35 to 37% discounted. I think we could break 40 by the end of June. This is one to watch, guys. This is one to watch because the prices have been very strong in Murray, but man, it looks like it's about to cave. And you can see it right here. Look at the supply just going vertical. Okay, we're now where we were in July, and we're going to blow through that. Something's going on in Murray, guys. You guys need to tell me what's going on in Murray County. I don't know what's going on there. Rutherford County, 19% discounted. Now we're up to 23. Remember how I said rents were strong? Rutherford County is a strong single-family rental market. Okay, it's my only explanation for this because it just doesn't make sense when you look at supply. Supply is just skyrocketing. It doesn't make sense. I guess it has started to pick up, right? It was at 19 at the end of April, and now it's at 23. Rutherford County, I would, if you can, take your time. Take your time. Prices, guys, they've kind of peaked. Okay, I looked at prices. I don't have the chart, but they've kind of peaked. They're not dropping, but they're not going up. They're kind of settling at that 500 on median. And I think that's a sign. So here we go. Sumner's been very stable at 30% discounts, lower than it was last year. And when we look at supply, even though supply is higher than last year, it's actually staying pretty strong because contract volume's been fairly strong here. Okay, this is Sumner's got a lot of new builds, and it's one of the stronger counties. It's not as strong as Wilson or Williamson, but Williamson here, 26% discounted. You can see we're trending up. It's going to trend up all the way through September. I would just expect this line to follow it. Williamson is shockingly predictable, guys. Let me show you what contract volume is in Williamson. Look at this. Remember how I said I thought it would mirror itself? I was off by a week. I was like, I must be wrong. But look at this. It's just mirroring what happened last year. It's just mirroring it. Okay, contract volume is tanking just like it did last year. We're going through Memorial Day. Guess what? It's going to continue to tank. And then there's going to be a June rush. So again, I know it's Memorial Day. I know you guys want to be at the lake and have fun, but it's a great week to make offers. It really is, because like I said, nobody wants to deal with houses right now. And buyers especially want to take the weekend off. Renters maybe coming into Nashville having fun and looking for rent. But the truth is, guys, this is a great week to make offers. Okay. I hardly think that demand is going to pick up over the next week due to Memorial Day. It's a great time to make offers. My opinion, it's just my opinion. All right, Wilson, 33% discounts. It is 33% discounted. That popped up quite a bit. It was 29% last week, popped up to 33%. But guys, look at the supply. First of all, it's under 2, so it's a very strong supply ratio. And again, that's active listings to contract volume. Very strong supply to begin with. But then look at this. It's just so close to where it was last year. It just seems so strong. Wilson seems so strong. Just to recap, Davidson County has the biggest warning signs. Wilson, Williamson, very strong. Rutherford is coming from a very strong place. I believe it's because of the rent rate increases. Sumner had a lot of inventory, has a lot of active listing increase over last year, but there's demand that's coming up with it. So Sumner's actually going to do pretty well this summer, in my opinion. So Sumner, Wilson, Williamson, strong. Rutherford, strong. Davidson, Murray, major caution flags. Great opportunity in Davidson. If you want to be aggressive with offers, be aggressive with offers. You can be aggressive in Davidson. Williamson, you get punished for it, okay? And I'm all about making aggressive offers. I love it. I help buyers, and we do it all the time. Sometimes we get insulted. Sometimes people get frustrated. But the truth is like that's where the price floor is. We're at least giving you a price floor. I'm happy to make aggressive offers, but in Williamson, it's a lot harder to do that and be fruitful right now. Wait till the school starts, and it's going to be fun. Okay. But right now it's really tough. Hopefully it's starting to slow down a little bit. That's my take. Again, prices are flat to where they were. They've peaked apparently for the year. We'll come in to May and we'll see Greater Nashville Realtors will report somewhere near where they were last month. And from then on out, I believe it's going to drop. We're going to start seeing major discounts, and it could be, in my opinion, a much softer second half of the year in parts of Nashville, Davidson, Murray, and potentially the other ones, guys. I mean, we are getting active listing growth, so it could spread. And certainly if narrative changes or there's fear baked in the market, or, as I say, Carvana stock, Carvana, however you say it, if it crashes, so does Nashville's housing market. I don't know why, but there's just a correlation there. You can make fun of me. The ridiculous money printing, it somehow is related to both of these things. I don't know. We're playing with monopoly money, guys. Thanks for watching. I look forward to seeing you next Saturday.